remember right, she kind of had a little country accent because we got some of those down here in Kentucky, you know. And she goes, you got to just spit on that thing. You got the hot tour spit on. And he said, what? She said, you got a hot tour spit on that thing. And so apparently she goes viral because she has a creative way of describing something that millions of people know how to do, and everyone knows how to spit, right? And so, but she becomes famous, and now she gains this big following, and because she has this big following, she ends up creating a coin. She has this cryptocurrency called the Hawk Tuah Coin. And I don't know what the backing of it was. Most of these cryptos are supposed to have like a white paper associated with it, where it's like, okay, this is the utility of the coin. This is the goal. This is the ecosystem we're building around this currency. Currency is supposed to be backed by something, right? And basically, she put this coin out. A lot of people bought, the coin because people are stupid sometimes or something. I don't know. I'm not going to call them stupid, but Lord Jesus, come on now. There's no value here. And the coin literally tanked. I want to say it tanked over 90 something percent in a very short period of time, from what I understand. I mean, a lot of people lost a ton of money. I think the total amount of money that was lost was about $500 million. $500 million. Now, remember though, money is energy, and energy isn't created or destroyed. It kind of just changes hands or changes form. So do you really think everybody lost money with this coin? Give me a yes or no. Do you think everybody who bought the Hawk Tuah coin got burned, or do you think it was just the suckers who came in late? What do y'all think? Do you think that the Hawk Tuah girl and her friends and her insiders that had inside information that set up this coin, do you think they lost everything? You think they walked away broke? What y'all think? I'm gonna sip my coffee while y'all give me your answer because I'm hoping that none of us are crazy enough to believe that everybody lost. No, everybody didn't lose. A lot of money changed hands. 500 million dollars is $500 million. Is $500 million, which is also $500 million. If $500 million doesn't really become $0, it's just $500 million that goes from one party to the other. So, so if that coin had a market cap of $500 million, $500 million is $500 million, which means that just because a lot of people walked away with nothing does not mean that there were not people who made a collective amount, a collective total of $500 million. Okay, so the nature of a pump and dump is a little bit like a financial game of musical chairs. Somebody gonna get a chair, and somebody's gonna not have a chair. And this is how a lot of Ponzi schemes work, things like that. It also has happened quite a lot in cryptocurrency, and basically there are a pretty large number of financial theories that explain the investor behavior that drives these pump and dumps. Donald Trump's been accused of doing pump and dumps. Elon Musk has been accused of that. Donald Trump used to do a thing back in the 80s where he's always known that his words have power. He has the ability to breathe financial life into something, to make something valuable that had no value before. In fact, right now, his son, Donald Trump Jr., whenever Donald Trump Jr. joins a corporate board, the company doubles or triples in value immediately. It just does because there's an expectation that his association is going to lead to more money. Doesn't matter if the expectations are real or fake. It kind of becomes a Wizard of Oz type scenario. DJT, Donald Trump Technologies, or whatever that company is, that I've told you guys a lot of times, it doesn't have any intrinsic value, but it's worth billions of dollars because again, he can breathe economic life into things. Elon Musk breathes economic life into Dogecoin. If you go to Doge and you buy the asset on the website, they tell you that this coin is a joke, that this coin has no value, that it has no use, it's not worth anything, but people still buy it. And it's actually, I think the market cap of Doge is more than Target. I want to say about $60 billion or something crazy like that, right? So you might say, how in the hell can something that has no value suddenly have so much value? That's very strange. Like, for example, did anybody give me a yes or no if you heard about the banana that was taped to the wall at Art Basel and it was recently sold for $6 million. A lot of you saw that. There's a whole Wall Street Journal breakdown of the artist who created it, and he was kind of making fun of the ridiculousness of the art world and everything else. And he's successful because it did make the art world look pretty ridiculous. And you would say, well, what reasoning would anyone have to spend $6 million for a banana taped to a wall? And in fact, the guy who bought the banana taped to the wall literally took the banana and he ate the banana. He got online and he ate the banana in front of everybody. He said, "This was a really specially good banana. This is a delicious banana." So, long story short, there's a whole set of mechanisms that drive this value in a way that it either is real or not real, depending on how you want to perceive it. And it can be ridiculous or logical, depending on how you view it. So what I'll do is I want to actually break down a few ideas and theories behind how this kind of thing works. One is there's something called prospect theory in behavioral economics. Shout out to Daniel Kahneman and his partner Tversky. I don't know what's Tversky's first name, but I think Daniel Kahneman got the Nobel Prize recently, and part of it, his contribution. I read a lot of his research papers when I was working on my doctorate. Part of his contribution was something in behavioral economics called prospect theory, and what he says here is that investors tend to overweight their recent successes and underestimate the possibility of losses. Overconfidence makes them believe that they can predict market movements, leading to excessive risk taking. Irrational exuberance driven by a belief that this time is different leads to asset bubbles as prices deviate from intrinsic values. What does that mean? Well, that means that basically investors get a little bit crazy when the market is really strong like this. Investors start to believe that everything that they touch will turn to gold. They start to tell you falsely, and you'll see lots of people on the internet that will tell you that they can predict which stocks will go up, which ones will go down. A lot of them are day traders. Has anybody seen the day trading programs are like, give me $10,000 and I'll show you how to quit your 9 to 5 by day trading, and all these great things are going to happen for you. And they don't tell you that 90+% of all day traders lose all their money. A lot of you have tried it. A lot of you got into a trading program. You learned about all the little bips and plips and resistance points and everything else, and you jumped in there and it didn't work out and you walked away. And day trading tends to attract a lot of young men because young men like to gamble. We like to roll the dice. We like to take the risk. Women can get into it also. I'm not saying women don't day trade as well. There are lots of women who do it. And I'm not here to say that every day trader is going to lose money. If I go to Vegas, there are plenty of people who go to Vegas every day and make money. Absolutely, plenty of people. But that does not mean that the average person will go to Vegas and make money. Do you see the difference there? Because part of the lure of anything that's ultimately going to screw you financially is that it has to give you some type of hope. You have to have some type of belief that, okay, for me, it's going to be different. Yeah, lots of other people lose their money, but it won't happen to me. And sometimes it doesn't happen to you. That's the even trickier part. And so, in a way, it reminds me of this rapper who rapped one time where he said, every woman that sleeps with me thinks they're going to marry me and get all my money. But none of them get my money. He said, my wife gets my money, but none of those women that have ever slept with me got my money, but they all bought a lottery ticket and they had to pay for the lottery ticket with their body. He didn't say it like that, but that was my interpretation as I was listening to the song when I was about 25 years old. So I said, oh, I get it now. So you dangle out your money and you get women's attention. You get women to say, ooh, there's money. I can get that. And your plan the whole time is I'm not giving them anything but I'm going to ask you to pay in advance, which means that you're going to just be a person who does. And this happens all the time. People enter into lotteries when it comes to dating. You think you'll be the one that person picks, and they can't pick everybody. Everybody can't be his wife. Everybody can't be her husband. So lots of people try, and most people fail, right? So anyway, with that being said, that's similar to how the Ponzi schemes work. That's similar to how the pump and dumps work. So basically, if you look at prospect theory says that from a behavioral standpoint, a psychological standpoint, investors become vulnerable largely because there's greed and overconfidence kind of together, right? So if you're a greedy person who's overconfident, which tends to happen when the markets are doing really well, you are quite vulnerable to making economic mistakes because what happens is you're chasing waterfalls. Remember, don't go chasing waterfalls. Please stick to the rivers and the lakes that you used to. Hey, best one of the best songs ever, best group ever. My cousin's in that group. I told you I'm very proud of my cousin, Tiana, T-Boz. That's the one. Tiana Watkins. That's her last name. Our grandfathers are brothers, by the way. I have to verify that because someone asked her. They said, "Are you Boyce Watkins' cousin?" She said, no." And I'm like, "Excuse you, ma'am, but actually, your grandfather's name is Sam. My grandfather's name is Matt. And by the way, Sam owes Matt money from the 1950s, and that's why they didn't talk for 30 years because Sam needs to pay him back." But anyway, and so TLC, greatest group ever. They had that song, "Don't Go Chasing Waterfalls," and I think that that's something to kind of keep in mind when it comes to investing, right? Typically, when something looks too good to be true, it probably is. And I really and I emphasize that because when they tempt you with things that seem like you are able to take the easy way out and the easy route, and make a substitute for time. Time is hard to substitute for time when it comes to wealth building. Then that's how you get pulled in. That's how you get suckered in. And in fact, actually, I was heartbroken because I found out that there were a lot of people that are in our collective. We have millions of people that follow us on different platforms online and stuff like that, and I'm really proud of this. I think that we've been able to make Black wealth into a thing around the world. And what happens is if you go to Instagram, if you go to TikTok right now or Instagram right now, you will find dozens, if not hundreds of accounts that are fake Boyce Watkins accounts. A lot of you have been solicited by these accounts. If you follow me, they try to follow the people that follow me, and then they send you a personal message and they pretend to be me. They're really good. So I really have to warn you to be really, really careful because we've had students really get hit pretty hard with this. And the way they are able to scam is they make a promise that is quite illogical. That they'll say something like, "Send me $5,000 and I'll turn your $5,000 into $50,000." And because I've got this special Bitcoin website that says that if you invest $500, I'll turn it into $5,000 or $10,000, right? And it doesn't matter how much they promise you. They can promise you anything. And because their goal is really to get your $500. So if I say, "Here, give me $500 and I can turn it into a million," if you believe that the million could be real, let's say it's coming from someone like me that you trust, which is the fake me. It's not the real me. I don't DM nobody but my wife. So if I ever DM you and I'm talking about, hey brother, you've been building your generational wealth, brother. Then come on here, brother. We got to do this for our people. We got to be we family, brother. That's not me. I don't DM. I don't crawl into people's DMs like that. But that's what they do. So they're literally looking for you to go chasing a waterfall. And what I will tell you is that 9 times out of 10, these crazy investment schemes are no good. And what happens though too is, in a way, it's a little bit like dating in the sense that if you ever hear somebody say all men are garbage or all women are garbage, we know all men are not garbage. We know all women are not garbage. What you're really saying when you say this, why I tell you not to say this, it says when you say all women are garbage, you're really talking about yourself, right? You're talking about the women that you've selected, right? You've talked about what you've been chasing, right? Because I don't think all women are garbage, but I know that some women can have a garbage like appearance. That some of their behavior can be very garbage smelling behavior. I'm not trying to be mean or nothing, but y'all know what I'm talking about. Y'all know there's some garbage people out here that will do horrible things to people, that will steal from you, that'll lie to you, that'll manipulate you, that'll hurt you, right? So we know that there's some garbage people out there, but that does not mean everyone's garbage. So if I say that everyone's garbage, then that means that I tend to be attracted to garbage, perhaps. I don't know. And so the same thing is true with investing. A lot of people that say investing's bad or investing's a scam or investing will cause you to lose your money typically are revealing their style of investing. You've chased a lot of waterfalls, and those waterfalls were not real. And what I would say is that this is where the conservative investor tends to have the most resilience. Warren Buffett, who's one of the richest men on the entire planet, is also one of the most conservative investors you will ever find. He's not, this gunslinging alpha male, kick everybody's ass kind of guy. He's not like, "Yeah, I just bet it all." He doesn't talk like that. Warren Buffett is the guy where you'll sit there and you'll be like, Why aren't you invested in that? Like there's a lot of money right there. Warren will say, nope, don't want to do it. Nope, I'm gonna hold my money. I'm gonna hoard it. Warren Buffett is hoarding $300 billion in cash right now. He could go right now tomorrow and go buy he could go buy Target tomorrow if he wanted to. He could go buy Coca-Cola with cash, with the cash in his checking account if he wanted to. But he doesn't because he's conservative. He's careful. He understands the most important rule of wealth, which is preserve what you got. In fact, if most of us were raised in a conservative, careful, a financially conservative, I'm not talking about socially conservative. I know that it's a complex political issue, but if you were raised in a fiscally conservative household, your odds of being wealthy would be about 10 times greater than the average American, just by being raised in a space where you protect and you preserve what you have. The number one rules of capital are that capital must be preserved and that capital must be put to its best and most efficient use. That's financial theory I'm dropping with y'all. This is the stuff that I would teach to students at Syracuse. This is the stuff we learned in our doctoral program. That capital must be preserved. And when you think about the fact that capital must be preserved and know that that's one of the most fundamental wealth building rules that there is, I want you to look around you and look at the world and look at what gets celebrated. I went to the club and I dropped $200,000. Look at my new Lamborghini. Look at me draped out in Gucci from head to toe. Right? These are seen as symbols of success. That's not a symbol of success. That's a symbol of excess. You're not winning, you're failing. And you're failing loudly and in public. You're embarrassing yourself. When you become educated and enlightened on how money actually works, you look back and you say, "Oh my God, I can't believe I did that. What was I doing?" And this is a culture that's pushed on Americans. It's really pushed on Black people because they got you looking up to the wrong Black people, the loud, flashy people instead of the conservative people, the people that hold on to their resources, the people that will preserve a dollar, the people that will respect their dollar. If you respect your money, you're not going to give your money away. Just like if you respect your body, you're not going to give your body away to everybody. When you respect something, you see its value. When you see its value, you preserve it. But what does the world tell you to do? Just give it up to everybody. Give up your money, give up your body. A man splatter your seed all over the city and have the babies, mamas everywhere, right? You're not, or you give away your labor, you give away your time. Oh, I got this job, girl. I'm making, $30 an hour now. Or hey man, I'm down at the factory now. I'm just working. I'm spending all my time working. I get that. I respect that. But the problem though is that you're giving something away that is probably more valuable than you think. Your time is more valuable than you think it is. But if you've never been given a vision on the value of that thing, then you're gonna just give it away because you're gonna say, well, I'm worthless unless somebody wants it. If nobody wants it, then it has no value at all. And that's not true. I think that when you get the blessing of losing your job, then the blessing is that you're going to go through some struggle figuring out what your next step is going to be. But if you make the next move your best move, you might find that it actually elevates you to a place you never would have gone if you were distracted by this 9 to 5 that was taking you nowhere except uh, how to pay your bills next week. Like that's it. Jobs are built to help you survive. Jobs are not built to help you thrive. I've mentioned to you that 99% of all people cannot work their way to wealth. They cannot save their way to wealth. That's just the structure of this economy. Okay. All right. Now, before I move on, what I want to do remind you, number one, if you want to join us for stock market investors class later on today at noon, I'll send you guys a link where you can do a free trial in the stock market investors club if you want to, or you can also go to drboycestockmarket.com. That's drboycestockmarket.com. So feel free to join that, drboystockmarket.com. Secondly, tonight we will have attorney Tamika Johnson, who's going to come in to our Legacy Investors for Tomorrow program, our estate planning group, because protecting your legacy is important. Having a good estate plan in place is critical. You saw attorney Johnson here yesterday. You could tell she knows her stuff. So she's going to be in for a special private session where she's going to literally just bombard you with all the breakdowns on your estate plan and answer questions and stuff like that. So if you'd like to join that, feel free to go to drboycelift.com, Lift. Lift stands for Legacy Investors for Tomorrow. So you can go to drboycelift.com. And if you want to do a free trial there, you can use the code, write this down. It's free morning, all one word, free morning. Morning is for money in the morning, and free is just because the first month is free. So use the code at checkout, free morning, and it'll wipe everything to zero for the first month, and you can give it a try. So somebody type that in the chat for me, please. So I don't have to say it 50 times. Drboycelift.com. And free morning, all one word, is the discount code. All right. So anyway, so moving on. So here's some other theories that explain why people bought the Hawk Tuah coin and why they lost all their money because of it. You would think that people would know better, but people never know better. The speculation is something that will never go away. The original website was drboycestockmarket.com, drboycestockmarket.com. All right, so let's see here. Okay, so prospect theory from Kahneman and Tversky basically says that investors tend to overweight their recent successes and underestimate the probability of losses. So that's, for example, that might be why you might have someone that says, "Oh, I can teach you all about the stock market because I made, look at how much money I made in stocks this year." What they don't tell you is that everybody made money in stocks this year. It was hard not to make money in stocks because the market was doing really well. So it's like if it's raining outside and I go out and I say, "Look at me, I found some water. I got wet." There's nothing special about that. Everyone got wet. Everyone found water because everyone felt the same weather. So when the stock market's doing well, overconfidence tends to grow because people tend to engage in something else. My dissertation committee member, his name was David Hirschleifer. He told me about something called self-attribution bias. And self-attribution bias, what that does is that means that we tend to be very biased when it comes to giving ourselves credit for things we didn't actually do, but then avoiding responsibility when things don't go so well. So if people talk about their favorite team, like I watch my team that used to be my team that's just always finds a way to lose, the Dallas Cowboys. I don't know if y'all saw them on Monday Night Football. It was absolutely comical how they lost that game. It's official. They are scrubs. It's terrible. But anyway, when people talk about their favorite team and the team is winning, they'll say we won. But when the team it loses, they say they lost. So right now, millions of Cowboys fans around the world are saying they lost, they blew it. But if they'd won, they'd be saying we won, we did it. So that's kind of how self-attribution bias tends to work. And so overconfidence makes you believe you can predict stock markets, which is not, which really most theory says that you can't predict the movement of a stock price. But because you believe you can predict, then you engage in a lot of extra risk taking. You have what is referred to as irrational exuberance, etc. And everyone feels that way, so that pushes stock prices up, that pushes asset prices up, that pushes the price up of worthless meme coins like the Hawk Tuah coin, stuff like that. Number two, another one, and this is actually another area that David Hirschleifer focuses on. He was a really nice guy, and I haven't seen him since I finished my dissertation stuff, but he was a really cool guy, very quiet, but just an absolute genius. He had something called herding theory, herding behavior. And basically, herding behavior says that investors tend to follow the crowd. So people tend to follow the crowd. And I mentioned that the crowd tends to get slaughtered. Sheep really get slaughtered. So basically, everyone follows the crowd and everyone gets slaughtered, but everyone feels safety because there's something safe about being part of the crowd. And actually, I was like, well, why would people do this if they know they're going to get slaughtered? Well, because studies also show that 70% of all people will follow the crowd, even if they know for a fact that the crowd is wrong. They will follow, 70% of all people will follow the crowd, even if they know that the crowd is wrong. So basically, um, it's something that does mean that if you want to be a good investor, you have to gain the courage to be a little bit of a leader. You have to be a little bit of a contrarian. You have to be willing to do things that are different from what everybody else is doing, because what everybody else is doing in many cases is not right. And the logical reason why following the crowd sometimes makes sense for people, even if the crowd is wrong, is like this. Now, pay attention. This is the point I want to illustrate this point. Hopefully I can communicate it clearly. Every decision involves risk. Every decision, most decisions do. There's very few decisions you'll make, especially in business and investing, that are 100% clear. So I want you to reflect for a minute on your own family, right? Give me a yes if you've ever gone through this, where maybe you came to family members and you had this big idea for a business, and people that loved you were just kind of crapping on the idea. Not deliberately, but just kind of because they weren't interested, they didn't have the time, it was too hard, they thought you were crazy, it's too risky, you're gonna lose money, you're gonna lose your job, whatever, right? Just that negativity that I ain't gonna lie, sometimes I call it negativity. It drives me crazy. I hate it, but it comes from undiagnosed, untreated trauma. Traumatized people tend to see the negative. They tend to see the trauma and the fear. So their fear of loss is greater than their desire for success. If you're driven by fear, it's very, very hard to succeed because you're going to spend your whole life playing struggle-nomics. You will never play power-nomics. You cannot thrive if all you're trying to do is survive. You cannot be a great swimmer if all you're thinking about is how do I make sure I don't drown today? If you're always looking down and back, you can never look forward and up. Visionaries look forward, they look up. Traumatized people who are stuck in their trauma look down and back. This is why we created the first ever Black financial therapy department in the Black Business School with my wife, who's a therapist. She's also a trauma specialist because we became aware that undiagnosed, untreated trauma in the Black community, because we tend to hate therapy, we tend to think therapy's for suckers. That is what's holding back a lot of Black wealth. If you get rid of the trauma, you fix a lot of stuff, relationships, everything else, physical health, mental health, all that stuff. It's all connected to the trauma. So when you think about this, going back to this point, remember, so here's the hard part. When you go to your family and you say, hey, y'all, I want to go climb Mount Everest, financially speaking. So you want to do something that's really, really hard. Like I want to build $1 million company. I'm gonna quit my job and I'm gonna work on this company, full time to see how far this can go. You're not able to say anything with complete certainty. You're not able to come in and know for sure that, yeah, if I work hard, it's going to be great. Because most Black-owned businesses actually fail. I don't know if y'all know that, but the failure rate of Black-owned businesses is like 80%. That's high. So that means even if you're passionate and you're excited, your odds of success are actually somewhat low. So people who just sort of live in that reality, they would say, well, why in the hell would you do this? Look, you only got a 20% chance of success. But if no one does it, then no one ever gets a chance to see their potential, right? Because 20% success means that if 10 people try to do it, two of them are going to be successful, and maybe one of them is going to become a multimillionaire. But if everyone's thinking the same, then no one's going to actually do it. So you go to your family and you say, I want to do this big important thing, and they all crap all over it, and then they know, no one supports you, everyone kind of makes fun of you, and so you're already feeling bad, right? So your odds of success keep dropping because you're feeling so bad. Your odds of success drop because you're not getting supported. Your odds of success drop because no one's rooting for you. Everyone thinks you look stupid promoting your product on Facebook. No one actually comes to your event when you have your grand opening. Just stuff like, you know what I'm talking about. We've all gone through that. I've gone through that. Do you know how many years I had to work at my shit until, excuse my French, before I even had any of my relatives even pay attention to what I was doing? My mother did, my brother did, but cousins and stuff, they didn't. They were like, whatever, this is dumb. Other professors. I had other smart Black people. I was in a listserv with other Black PhDs, and I was telling them about what I was trying to do and everything else. And the minute I started to get a little bit of shine, a little bit of success, a little bit more than they had, they kicked me off the listserv. They got jealous. They got mad at me. And I was like, what did I do? But yeah, they literally, and these same people, if you talk to them now, they'll brag about the fact that they knew me. They'll be like, yeah, I know Dr. Boyce. We go way back. I'm like, no, we don't. Because you were hating on me, man. I saw you hating on me. But that's life. You go through that. You go through that. So ultimately, it's hard, right? Because either you're not getting supported, and then if you do find a way to make it out of the mud, then you got to deal with their emotional reaction to that, which isn't always positive. Jealousy, competition, all this, oh, he only got it because he got lucky or whatever, right? We all deal with that. You're not the only one. So with that said, now let's say that you go out and you try to do something that's different and everyone's telling you, don't do it, girl, you're gonna lose everything. It's crazy, it's terrible, what's wrong with you? And then let's say that you don't succeed. You don't make it. Let's say you do lose your money and your investment and your business doesn't get off the ground. Well, then you got a whole bunch of people that are sitting back saying, I told you so. I told you it wasn't gonna work. They're like, and the thing is that that's the easy route because if there's an 80% failure rate, then it's easier for me to sit on the side and say don't do it than it is for me to actually say let's try. Right. And so really The reason Black entrepreneurship and Black institution building and investing is so hard is because it's already hard. And doing something that's hard requires the absolute best of you. It requires maximum support, maximum effort, maximum energy, a commitment to fighting through the fear, even though you know you might not succeed, right? You're going off the battle knowing that you might actually die on the battlefield. And so to some extent, the mindset of somebody who builds and does something different has to be one that's sort of committed to a principle that's bigger than just, am I going to succeed or not? Right? Like so like a great basketball player doesn't take shots because he knows every shot is going to go in, because every shot isn't going to go in. The great basketball player takes shots because they know that that's their best chance to be successful. Like Michael Jordan actually said this. Remember that commercial where he said, I've missed, 200,000 shots in my career, and that's why I'm successful? So, because we all know that if you don't take the shot, then your odds have dropped. Maybe your odds of success have dropped from 50% to 0%. And that's what happens. We create this reality where there's 0% success for Black businesses, not zero, but very low, because most people don't even take the shot because they say, if I just don't try, then I won't ever fail. But you won't ever succeed either. You're going to pretty much stick to exactly where you are. So for the most part, the reason that most people follow the crowd, and this isn't just true for Black people, it's true for everybody, is that you might get lucky and maybe you're going to be right and you'll look like a genius because you did something different from everybody else. But if you fail alone, then people are going to make fun of you. They're going to say, see, I told that Negro not to do that anyway. That's why he failed. That's why you're a sucker because you tried and we all told you that it wasn't going to work. But if I fail as part of a group, then I get the protection of the group. I can say, well, it's not a big deal because look, everybody failed, right? Or other people will say, well, yeah, well, we all fell for that. We all lost that. We all didn't, and so then it's like there's nothing that isolates you in that way. And in fact, actually, again, this doesn't just apply to Black people and Black business owners. This applies even to CEOs. They said CEOs will follow the crowd because it's safer to do that. Because if you fail by yourself, then they're going to say you failed because you tried something different. But if you fail as part of the group, they're going to say, well, it's okay that you failed because all of us failed. All of us made the same mistake. So it's okay. But it might have been something stupid. You might have had a bad leader who made everyone think that we're supposed to all go this way when you knew in your heart that that was not the way to go. And rather than listening to your instinct, listening to your gut, listening to yourself, your inner voice that God gave you to guide you to a better place, you listen to them. You listen to a bunch of stupid people that don't know what the hell's going on. And next thing you know, you end up somewhere that you know you didn't have to be because you didn't have the courage to say, no, I'm going to go this direction. And it's the right decision, whether it works or not. See, that's the thing. That's the consciousness piece I want you to grab onto. Is that sometimes the right decision is the right decision is the right decision, even if it doesn't work. In basketball, if you know basketball, you know sometimes a good shot doesn't go in. But that don't mean it wasn't a good shot. That just means it didn't go in that time. But in a game, if I keep taking good shots, eventually they will go in. That's probability theory. That's how probability works. That's how statistics work. So if you are taking a good shot, if you have a passion, a dream, an idea, and you spend time researching it and you spend time thinking about it and you do your best to prepare as well as you can, then you're taking a good shot. And I'm here to warn you, tell you, advise you that a lot of y'all are going to take good shots that are not going to go in. But remember that just because it didn't go in doesn't mean it wasn't a good shot. Keep taking the shot. Keep taking the shot. A good basketball coach will not take a player out because they took a shot and it missed. A good coach does not do that. A good coach will tell their player, keep shooting. It's okay. I'm here to ride with you. It's eventually those shots will go in. That's what a good coach does. A good coach doesn't say, "Oh my God, he missed two shots, so I had to take him out." They don't do that. So ultimately, what I encourage you to do is when it comes to your life and the lives of your children, especially, encourage them to keep taking the shot, keep taking the risk. And what you do is you optimize the probabilities of success by teaching them to prepare and to take calculated risk. Think it through. Make sure that you're ready. Maximize all your resources. And then you optimize their chances of success by helping them out. You support them financially if you can. You support them emotionally for sure. Cheer them on. Buy their product. Do everything you can to help them to become successful. And then at least you're optimizing that probability of success as you move forward because nothing is guaranteed. There are the smartest, most educated, wealthy people that start businesses every day that are absolutely going to fail. Failure is something that's always going to be out there. There's no way to guarantee success 99% of the time. So you have to kind of go in just knowing like, hey, this may not work out, but it's still the right choice. And don't let anybody talk you out of that. It's easy. The Negro naysayers can always sit on the sideline and eat their popcorn and make fun of people that tried and failed. And people like that, I feel sorry for them because they'll never reach their potential. They'll never grow into anything. Their lives will never get any different. They're just going to get a standard life. But I don't know about you, but I want something different. I don't want to live in the world of average. I also don't want to be on my deathbed knowing that I didn't try. So whatever it is that you want to try, just go into it kind of knowing these things. All right. So let me pull up one last little theory, and then we're going to finish up for today. And just a reminder, if you're not on the text list for this class to get invited to the Zoom, pull out your phone, text the word morning, MORNING, to the phone number 87948. So text morning to 87948, and I'll send you guys a link. Sometimes I stream on YouTube, but I stream on different channels, so it's hard to kind of follow on YouTube. But if you text morning to 87948, you get an invitation into the private Zoom. So you'll be here every morning. We do this every morning, 10 a.m., 7 days a week. This is what we're committed to. We've done this hundreds of times already now. I think we've done this for a whole year so far. So we're almost at the end of the year. So we've probably done about 300 of these trainings or something like that. And I believe that if you talk about economics every day, you will get good at it. And that's the whole philosophy behind Money in the Morning. All right. So number three, here's another theory that's out there that's really interesting, and this is called adaptive markets hypothesis. The adaptive markets hypothesis, which I'd never heard about this in grad school. Let's see. It says investors operate in an evolutionary framework where they adapt based on past successes. Interesting. So your past successes drive how you view the future. It makes sense. Overconfidence can develop when strategies that worked in the past are assumed to work indefinitely. That is a very bad assumption when it comes to investing, especially the stock market, because you have what they call regime shifts. The environment changes. So the way you made money in 2014 might not be the way you can make money in 2024. Irrational exuberance, that's where people become exuberant emotionally and they're highly irrational, just kind of, sort of psychologically supercharged. It arises as investors ignore the changing market dynamics and focus instead on perceived new norms. So the key drivers of this emotion are things like overgeneralization, where you look at past success and you extrapolate that into the future. So a lot of people will do this. They will buy a stock because the stock has done well in the past, even though all the research says that the past ain't got nothing to do with the future when it comes to predicting the stock price. It doesn't. But it doesn't matter how many times I say this. People will buy a stock because it has a lot of momentum behind it and the price has gone up. And for the most part, that just doesn't actually work. It's also social reinforcement, positive feedback from peers and media. So when you have a stock that is getting lots of media attention, like Nvidia, a lot of people flock to that stock because they're like, oh, I want to invest, so I'm going to invest in Nvidia. Or the Hawk Tuah girl, she puts out the coin, and even though it's garbage, it does really well in the short term. So everyone hears about this, so they all jump in hoping that they can make money, and instead they lose 90% of their investment. It happens all the time. So you want to keep in mind just some of the psychological drivers like FOMO FOMO, greed, FOMO's fear of missing out, greed is very bad when it comes to investing. Greed will get you taken out financially. And also you have just dopamine. Money is a drug. Money affects the dopamine levels in your brain. You also have cognitive biases, like just sort of this over assessment of your knowledge of the market, and something else called recency bias, where basically whatever's happened recently is what is at the forefront of your mind instead of understanding the whole perspective of the market. And this is where consciousness comes into play. We talk about financial consciousness every day. Consciousness is where you can understand that I'm not going to get trapped in the moment. That this moment isn't all that there is. There's a whole lot more out there for me to understand, and I have to be very careful and conservative in terms of how I approach the future. So be careful with these things. These are things that will never go away. Right now, they're at a kind of not an all-time high, but at quite a high because the stock market has hit. I think it's hit an all-time high this year about 50 times, and also cryptocurrency is going crazy. There's a lot of money out here that's being made, and you deserve to have a piece of that money. But I encourage you to really sort of be thoughtful and careful and methodical in terms of how you approach it. For example, diversifying your portfolio and not putting all your eggs in one basket is one important rule of investing that a lot of people violate. They'll see one investment that does really well. They'll say, this stock has done well. All my other stocks have done bad. So I'm going to sell my other stocks and put all my money into this one. And then next thing you know, that stock crashes and they lose everything. So you want to just really be really careful about that. A lot of people got hit like that with Enron. You remember Enron? Enron had a lot of employees who, for whatever reason, put almost all their retirement money in one stock. That is absolute death financially. That is something that would be a complete no-no. If I talked about that in my doctoral program and said, "What do you think about me putting my whole life savings in one company?" They would say, "Why would you do that? Only crazy people would do that." Well, not crazy people, but maybe uninformed people. That don't understand how this sort of thing works. So follow the rules, be careful, be safe, and if you do that, if you take that approach, then you will build wealth. And the other thing too is that consistency piece is really important. Like I explained to you all, like little basic things. Like I mentioned that if your grandma had bought you $100 worth of Apple stock in 1991, it would be worth several $100,000 today. If she bought you $100, every 6 months worth of Apple stock, then you'd probably be a millionaire actually. And so if you think about it, go back to 1991 and how many times we spent $100. Right? How many times, like spending $100 was not a big deal even 30 years ago. Or Bitcoin, just Bitcoin, I think is just a crazy one where literally if you took the amount of money that it would cost you to go out to dinner in 2013 and spent that same amount on Bitcoin, you would be a multimillionaire right now. Right? Literally, if you just said, everyone keeps saying this thing could have some potential, so I'm going to buy some and just sit on it. So let's say you went and you said, okay, I was going to spend $100 at the movies. Let me buy a hundred Bitcoins there because they're $1 a piece. Well, 100 Bitcoins right now would be worth what, $10 million right now, something like that. So, so I want you to think about how many times you spent $100 in 2013 or 2014 or 2015, and you knew about Bitcoin. You probably found out about it around 2015, 2016, and because we were distracted, a lot of the money walked right past us. So a lot of times I invest in things not because I know what's going to happen, but because I know something's going to happen. So you don't know exactly what's going to happen, but you know something's going to happen. And the reason I spread my money out into different investments is because when something happens, I want to see if I can be there. Like I invested in Nvidia as an afterthought. Our son came up to us and he said, "Hey, Boyce, you should buy stock in Nvidia." And I said, he calls me Boyce because I'm his bonus dad, but he's a great kid. I love him. And he said, "Hey, you should buy Nvidia." I said, "Why?" He said, "Because they make the chips for my video games." So I said, "Okay." Doop, 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 doop. We owned it. It was that quick. I forgot I bought the damn thing. I forgot I bought it. It was that quick. But maybe I bought $300, 200, I don't know, a few $100s worth. I don't remember how much it was. And then Nvidia stock just goes berserk. And I'm like, I wonder if I own that. And I look in there, I'm like, yes, right? So ultimately, that's kind of what happens. You have to make sure you're there when something big happens. Something big is going to happen. There's going in 2025, something amazing is going to occur that you um can't even imagine right now, right? And so the reason you invest consistently, and this is a great use for your spare change, your extra money, stuff like that, is because when it does happen, you want to see if you can kind of be in the space to benefit from that. That's how people make money. So anyway, I'm going to stop talking now. It was great to see everybody, And don't forget tonight, we're going to do estate planning with attorney Tamika Johnson. I think Johnson's her last name. I hope I didn't get it wrong. And she's really good, and she's going to talk all night about legacy building and answer your questions and everything else. And you can get the recording as well. So if you'd like to join us, just go to Dr. Boyce Lift, Lift. Lift stands for Legacy Investors for Tomorrow. That's the name of the group. drboycelift.com, and you can use the code word free morning, all one word, free morning at checkout, and it gives you the first month free. So drboycelift.com, free morning. Somebody type that in the chat for me. Second of all, if you are interested in stock market investing, going deeper, that's something I'm pretty good at. You can join us at noon, and we're going to just do nothing but stocks. I'll answer your questions. We'll talk about my favorite stocks. You can have access to the whole curriculum, and you can do a free trial there by going to drboycestockmarket.com. That's drboycestockmarket.com. Thirdly, if you are not on the text list for this class and you like what you hear and you enjoyed this and you want to keep coming back, then just text on your phone the word morning, MORNING, to 87948. Text morning to 87948. And one more thing I want to mention really quickly is that if you want to talk to someone about your insurance or about your financial planning, we have somebody in the group that's a really great friend to the Black Business School named Aisha Verzi. And Aisha, I don't know if you're in the chat or not, but if you can pop in your phone number in the Zoom, that would be cool. I'd like to see if people want to pick it up and call her. Or you can also go to drboyceoffers.com and you look for Aisha's number. It should be at the bottom, and you can give her a call. Tell her that I sent you, and there we go. Did you put your number in here, Aisha? How much money did I make from Nvidia? Terrence is asking. I don't remember. I think it was like $100,000 or something like that. So maybe there we go. Her number is 626-340-5746. That's 626-340-5746. All right. So yeah, I think I made about 100,000, maybe something like that. I wish you always look back and you say, gosh, why didn't I buy more? Right. But it was a pretty good win. And what I did with that stock was I did not buy more. I just held it, right? I want to be a long-term investor in Nvidia, and also I did invest in like some ETFs for AI. And so one of them is AIQ. AIQ is an ETF in the AI space that's done pretty well over the last year or two. And I believe AI is definitely the future. So anyway, guys, have a good day. God bless you. Thank you guys for hanging out, and I will see you all tomorrow morning. Take care, everybody. Bye-bye.